The US Treasury just announced exactly what's coming, and it might shock a lot of you out there, especially if you do hold XRP and or just crypto in general. So with that being said, welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. If we take a quick look at this announcement by Ripple back in April, specifically April 4th, pay attention to this date, pay attention to the month, because all of this is connected. We have Ripple is launching their US dollar stablecoin, taking on a $150 billion market dominated by Tether and Circle. Now, you might be thinking about this and saying, well, Nick, we already know about this. Why do we even need to know about this anymore? Well, it's because this was announced back in April, around the same exact time that we have this meeting here with Nellie Liang, Undersecretary for Domestic Finance. And we have here Ripple, Stellar, the U.S. Department of the Treasury. Ripple and Stellar at a roundtable discussion alongside Nellie Liang, Undersecretary for Domestic Finance, U.S. Department of the Treasury. Washington, D.C., April 23rd, 2024. Discussion on the technical and regulatory requirements for upgrading the legacy capabilities of central bank money, exploring the potential implications for consumers, investors, and businesses. They also delved into the long-term vision for the integration of CBDCs, tokenization, and stablecoins into the broader US financial ecosystem, including potential benefits for economic growth and resilience. And this is the image of, we have Lauren Beliv, the head of public policy and government at Ripple, Nellie Liang, Undersecretary for Domestic Finance, and then also Paul Wong, Director of Product CBDC and Institutional Assets at the Stellar Development Foundation. Now, here is a more in-depth view of all of the names here. We have the CFTC, the OMFIF, we have MasterCard, Terranet Ventures, former CIA agents and things like that. I mean, this is a very substantial list of individuals that were at this meeting, but it's very interesting that the discussions are around CBDCs, stablecoins, and tokenization. Three things that Ripple, throughout roughly the end of 2023 and even all of 2024, has been focused on. But even before this meeting, Ripple was heavily focused on tokenization, and then also on April 4th, we get the announcement of their stablecoin. And then we have the US Department of Treasury meeting with all of these big players, talking about implementing and actually having these things integrated within the broader US financial ecosystem. But what's even crazier is if we go over here to the OMFIF, we have unlocking alternative payment platforms in the US. This was announced just the day of, right? And we have, while US policymakers are evaluating whether a central bank digital currency is in the national interest, the private sector is steaming ahead with various forms of tokenized cash, and financial market participants are working hard to tokenize a range of assets. Regulators must come to a thorough understanding of the new rails on which value is being exchanged so that they can continue to provide effective oversight and minimize risk without stifling innovation. Against the backdrop, the OMFIF's Digital Monetary Institute was honored to be joined by Nellie Liang, Undersecretary for Domestic Finance, at the U.S. Treasury for an in-person roundtable in Washington, D.C. on alternative payment platforms in the U.S. During the roundtable, participants focused on two main areas: fast payment systems and tokenization. The session discussed the technical and regulatory requirements for upgrading the legacy capabilities of central bank money and explored the potential implications for consumers, investors, and businesses. The conversation also delved into the long-term vision for the integration of CBDCs, tokenization, and stablecoins into the broader US financial ecosystem, including potential benefits for economic growth and resilience. Very interesting, considering the fact that if we go over here to this document, and this goes back to April 16th and the 17th of this year, navigating change in US money and payments. Again, this was announced right around the same time. And by the way, yes, this is from Nellie Liang. Overview. What's new? Greater consumer demand for electronic payments, technology advances in computing and cryptography, opportunities from adopting new technologies and updating regulations, fast payment systems, tokenization, reducing risk of non-bank payment firms and ensure singleness of money. Could create substantial economic and financial benefits. Also, many other countries are embracing new payments technologies to further their economic and geopolitical objectives. We have money and payment systems background. Current US system, use of cash declining from 31% in 2017 to 18% in 2022. Payment costs, such as for credit and debit cards, are high. Cross-border payments cost even higher. Non-cash payments involve a time gap between initiation of payment and transfer of funds, creates counterparty risk and liquidity cost. Payments are expensive, slow, and error-prone because money resides in different data silos. Suggest systems could be improved by fast payments, make more efficient the mechanisms for transferring value across silos, tokenization, move from data silos to a shared ledger. And here we have new technologies, new systems, fast payment systems, funds available to a payee in near real-time 24/7, 365, two US systems, TCH, RTP, Federal Reserve, FedNow, systems in more than 100 jurisdictions, FSB 2024. And here we have the rise of transactions per capita in Brazil, Thailand, South Korea, India suggests can grow rapidly. And of course, we have tokenization. I don't think that we really need to go over tokenization. Everyone is aware of the benefits. But here we have the potential benefits from new plumbing. Interesting. Where did I hear that from? Oh yeah, that's right. Chris Larson from Ripple literally said, we are plumbers. We are changing the way money moves through the rails, or in this case, the pipes. Gains from trade opportunities, worthwhile transactions that do not take place because payments are inefficient, could lead to qualitatively different business models, advances in financial equity, more rapid payments could help to reduce fees for insufficient funds or overdrafts, support global financial leadership role, support the dollar's international role, use of economic and national security tools, and more efficient cross-border payments, greater operational resilience with alternative technologies. Then, of course, here we have the potential benefits, faster payment systems, tokenization benefits as well. We also have potential cost, errors and fraud, tokenization, incremental cost, update regulations for non-banks as well. And then the conclusion. Adoption and R&D of new payment technologies is accelerating. The US should prioritize modernization with new technologies and regulatory frameworks. Potential gains are significant and risk are rising. Global financial leadership, participate in developing global standards based on democratic values and privacy, support the dollar's international role, use of economic and national security tools, and more efficient cross-border payments. Now, outside of this is very interesting because they're calling for the new plumbing. They're talking about the changing of, US money and payments. We have the Ripple stablecoin on its way. A lot of these major changes are happening right now at this current moment in time while everything is really kind of aligning perfectly. We also have top US Treasury official says leaders actively evaluating digital dollar question. Again, this is Nelly Liang weighing in on CBDCs and the dollar's global role. And then we got this back in December of 2023, right around the same time, simplifying cross-border payments through CBDC technology. And yes, Ripple was highlighted perfectly in this. We have through Ripple Payments, Ripple has significant experience in providing solutions across the world, enabling frictionless cross-border transactions, reducing risk and cost through harmonized standards. Very interesting. And this does break down the interoperability between blockchains and currencies are still evolving, but CBDC technology can allow for interoperability between disparate currencies. Again, we already know that Ripple is offering a CBDC technology or platform, I should say, around CBDC issuance, payments, things like that. Then we have the DMI Annual 2024 Interoperable Solutions, Benefits, and Blocks. And this is ensuring interoperability in financial technologies will enable personalized, accessible, and frictionless user experiences for all. This is James Wallace, the Vice President of Central Bank Engagements and Central Bank Digital Currencies at Ripple. And this breaks down those silos. Traditionally, financial data resides in walled gardens, aka those silos. With this information being siloed within individual banks and institutions, this method of data isolation stifles competition, limits customer choice, and hampers the development of truly user-centric financial solutions. When we think about this, right, and we go back to this document here from the US Treasury, where they're literally talking about these silos, right? That's why all of these costs are so expensive around payments and moving money. It's because of these data silos, but also silos themselves moving money around. Like, it's kind of crazy. It's kind of crazy, especially when you put all of this into perspective. And then you go back to these meetings where, yes, Ripple is there. You have the US Treasury preparing for the integration of these types of currencies as well. It's wild to me. But then also, we have this From September 17th, new innovative technologies such as blockchain allow for market infrastructure changes, ensuring transparency and resiliency for the Treasury markets. Nellie Liang.
Our indicators suggest continued robust demand for Treasury securities, and the market remains the deepest and most liquid market in the world. This strength of the Treasury market is a privilege that allows the U.S. government to finance itself at a lower cost than it would otherwise. But it also comes with the responsibility to continue to ensure its resilience. For the past few years, Treasury and the financial regulators, consulting with industry, have made important changes to the market infrastructure. I believe these changes have made the Treasury market more transparent and more resilient, even as some work remains. And of course, we should expect the market will continue to evolve with new technologies and innovations, and that regulators will need to continue to address new risks while allowing for the benefits of innovations as they arise.
Now, building upon this, let's go back in time a little bit. Let's go back to January 1st, where we had Nellie Liang also addressing the final recommendation supports a faster, cheaper, and more transparent international payment system that associates with a cross-border system. Check it out.
As useful for the Fed's efforts. Third, the leadership from the Federal Reserve, the White House, and the Treasury Department will meet regularly to discuss the progress of the CBDC working group and to share updates on CBDC and other payment innovations. The second recommendation of the report is to encourage use of instant payment systems. Retail instant payment systems transfer funds nearly instantly, as opposed to the multi-day settlement period that occurs on some legacy systems. In the US, examples include the clearinghouse's RTP network, launched in 2017, and the FedNow service, which the Fed plans to launch in 2023. Global experience suggests that instant payments can make the payment system more competitive, efficient, and inclusive. Yet the potential benefits could be limited by certain frictions, such as inertia, slow adjustments among consumers, businesses, and financial institutions to change their habits or procedures to incorporate new technologies. In addition, these instant payment systems are generally accessible only to depository institutions. So to maximize the benefits from instant payments, the report suggests several efforts. First, the US government should continue outreach efforts around instant payments with a focus on the inclusion of underserved communities. Second, the US government should promote development of technologies that would allow consumers to more readily access instant payment systems. And third, in settings where appropriate, the US government agencies, which send and receive millions of payments a day, should consider and support the use of instant payment systems. The third recommendation is to establish a federal framework for payments regulation. This recommendation recognizes that non-bank financial institutions are increasingly providing payment services. They are contributing to competition, innovation, and inclusion. But non-banks that are not adequately regulated and supervised may pose risks to the users and the financial system. Today, oversight of non-bank payment providers is generally at the state level, and this varies significantly across states and may not address certain risks in a consistent and comprehensive manner. Accordingly, the report recommends considering the establishment of a federal framework for non-bank payment providers. A federal framework would provide a common floor for minimum financial service resource requirements and other standards that may currently exist at the state level. It also would complement existing AML, CFT obligations, the anti-money laundering and countering of finance terrorism obligations, and consumer protection requirements that apply to non-bank payment providers. A federal framework could work in conjunction with the US CBDC or with instant payment systems. It could provide oversight of firms that a US CBDC system may rely on to provide a range of financial services. In addition, it could provide a pathway for non-bank payment providers to participate directly in instant payment systems. And finally, the fourth recommendation is to prioritize efforts to improve cross-border payments. Cross-border payments, those that go from one jurisdiction to another, can take multiple days to clear and may have high fees. Indeed, it is one of the main impetuses for the development of much of the new technologies and efficiencies for payments. The report's final recommendation supports work to develop a faster, cheaper, and more transparent international payment system, while considering the potential risks associated with greater integration of cross-border systems. It recognizes that the United States has a strong national interest in supporting global standards for cross-border payment systems that reflect US values, including privacy and human rights, consistency with AML CFT obligations, and US national security. So just to summarize, we believe the digital assets and instant payments can transform money and payment systems. The report makes 4 recommendations. We hope to continue to work closely with other parts of the government on these very important issues. And thank you, Tim, again, for inviting me.
Now, when we think about this, right, everything that she just outlined, when it comes to cross-border payments and cross-border payment system itself, we could tie that all back to Ripple. We could tie it back to Ripple. We could tie it back to Hedera. We could tie it back to Stellar. Like, as we really think about what's happening here, this is the US Treasury literally telling you, hey, we believe that blockchain, digital technologies, digital currencies, they could significantly revolutionize and make efficient the cross-border financial system, yet everyone's still asleep at the wheel. This is wild to me. And think about the names that are at these meetings with the US Treasury. Because these are going to be the names that are winning. These are going to be the names that, are actually going to be utilized, integrated, implemented within the financial system. They were literally planning it at this meeting, how they can integrate CBDCs, tokenization, and stablecoins within the US financial ecosystem. Because at the end of the day, they know that these technologies have the power to revolutionize and support faster, cheaper, and more transparent payments internationally and even domestically. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.